This is the Daily Market Comment by Rafi Boyajian. I'm Maria Bashir-Devis. Thanks for joining us at XM.com. America's roaring labor market added a stronger than expected 390,000 jobs in May, while the unemployment rate held steady at 3.6%, even as the labor force participation rate improved slightly. The upbeat numbers dashed hopes that the Federal Reserve would be in a position to take time out from bumping up the borrowing cost later in the year, after it opened the door to doing so in the May meeting minutes. There could be a compelling sign that inflation is moderating as early as this Friday, when the next CPI data is due in the United States. CPI inflation is expected to have stayed unchanged at 8.3% year-on-year in May. That sentiment is likely contributing to the recovery in risk appetite on Monday as the knee-jerk reaction to the jobs data fades, and might also explain why Treasury yields are climbing only modestly on the back of it. The S&P 500 tumbled by 1.6% on Friday, ending the week down. The Nasdaq 100 slid even more, but E-mini futures for both pointed to solid gains on Wall Street today, as European shares rebounded too. Asian stocks were mostly positive too, aided by news that virus restrictions in the Chinese capital Beijing are being relaxed. The easing of China's tough COVID curbs should go some way in alleviating the constraints on global supply chains, and this in turn could substantially depress price pressures. The US dollar was marginally lower in European trading today, erasing some of Friday's gains. The safe haven Japanese yen struggled too, though it firmed slightly against the greenback. The euro inched up as investors bet that the European Central Bank will announce the end of its bond purchases on Thursday when it meets, and signal that rates will begin to go up in July. The pound was a surprise gainer and biggest FX winner on Monday as traders returned from the long holiday weekend. Unfortunately, Prime Minister Boris Johnson's first day back from the Queen's Platinum Jubilee celebrations isn't turning out so well, as he is facing a vote of no confidence by his own MPs. The vote is expected to take place as early as today. However, sterling's rise suggests traders think Johnson will win the no confidence vote, ending months of uncertainty about his future as Prime Minister. This was today's Daily Market Comment. Thanks for joining us at XM.com.